Okay, Asher Edelman, the man, the myth, the legend. Welcome.
I don't think I'm quite a legend, but thank you.
Well, definitely not. I mean, especially anybody who was around in the '80s, or even earlier in the '70s, and '90s. Obviously, a lot of people probably, I guess, most of our audience is probably under the age of 30, so they haven't even used a fax machine. But a lot of people remember you as the guy who inspired the Gordon Gekko character in the movie Wall Street.
Well, I wasn't the only piece of that character.
You were the good part. You were the art part.
I was the art part. Uh,
I think it was Ivan Boesky who was the insider trading part.
I mean, the art part was kind of as fake as the rest of the film, but Oliver and I are old friends and old enemies, and it's a very long story. But leave it as it is.
So I want to ask you about that later. But the reason, I mean, the reason for the interview today is to get your perspective, on the markets, what's happening in the world right now. You have a reputation as kind of being one of the more intellectual people on Wall Street, and your perspectives are always interesting. Today's an interesting day. The market is only down 1,000 points now. So, what's your take on what's happening right now?
Well, let's just go back a little while. About a year ago, I began to notice that we were heading towards all of the identical problems in the financial world that we had in 2007, 2008. And we were sitting on a junk bond nightmare, including the shale companies. The total of the nightmare is probably $300 billion. And it's pretty likely, and it was pretty likely a year ago, that at least $80 to $100 billion of that was going to be defaulted. Not a good thing. We're looking at the banks, though they claim all of this great reserve and liquidity, we're looking at them going into weekends, running out of money, and eventually the Fed having to come in through the repo market and save the banks from running out of liquidity every weekend. As you know, this has become much more serious now than before. And today the Fed announced, I guess, that it was going to inject $500 billion into the financial community, all of which is useless, but I'll get to that later. So we're also looking at the time and continuing derivatives books of 2 to 3 times what they were in 2007. We're looking at packaged loans at 2 times, packaged junk loans at 2 times what they were in 2007. And the only difference is that the banks were prohibited from doing a great deal of this, not to say they didn't continue to do a great deal of this in circuitous fashion, but the most evident fashion was that the hedge funds began to do these same transactions that the banks were prohibited from doing in even bigger volume than the banks had done before, without very careful measurement of their risk. But guess where the money came from? The money came from bank financing. And why did the banks run out of money every weekend? Because the balance sheets of the hedge funds had to be dressed up. And why did the banks run out of more money typically at the end of a quarter? Because the balance sheets of the hedge funds had to be topped up. And why did the repo market go dead? Because all of the banks knew what they were doing, or the big banks knew what they were doing, and they really didn't want to lend to other banks because basically it was clear that sometime along the way there was going to be another financial disaster, or at least a financially difficult further mess as we saw in 2007, 2008. So that's the background in the financial community of what was going on. I mean, I can go further. I can explain to you how there are funds that have been lending 100% of construction value to people like Extel to build buildings that are, 800 stories high and apartments that sell for $800 million. I'm just exaggerating at the moment. But so that you had all kinds of other interesting leverage. You had the banks lending to house owners, say in New York City, lending up to 80% of value. Those houses are down about 30 to 40% of value from the top of that market and when the banks were lending. So you have a very broad-based lending problem in the economy. So that we are situated in the same way that we were in 2007, 2008, but in a more extreme way than we were then. Now you start with that, and you know that's going to collapse one day. It needs a very minor catalyst. Something had to happen. However, everything happened. Not just something. And the everything that happened was obviously the end of world trade, which, though you may think it's useful in some form or another to build the American economy, it certainly is not, because it also inhibits liquidity, worldwide liquidity. But that's minor. So the next thing that happened is, I'm talking economically now, suddenly the Saudis and Russians decide they'll have a fight. The shale business was going out of business for the 3 years previous to the fight, and now the fight starts. And at the same time, the shale companies can't pay their debt and couldn't pay their debt before this fight started. And with this fight, of course, most of the shale companies, except the very large ones owned by large oil companies, will go out of business and will be sitting on $80 billion of debt as they go out of business. Not a good thing. Go ahead.
I was going to say, so, in a way, right now, to me, it feels a little bit like, March of 2008, right when Bear Stearns was starting to, fall apart. And it looked like kind of like a slow motion, car crash, train wreck. It was going, and then it sort of kept going and going. Now you mentioned, something interesting. So the situation now is different than 07, 08, because back then the problem was, the retail consumers. It was all the home buyers. You're saying now the problem is exponentially bigger?
Oh, tremendously bigger, double on all fronts, including home buyers. Okay. So let's go to the next step. Okay, so why is this not like 2007 and 2008? Because 2007 and 2008 was a financial crisis. This is a financial crisis. Oh, now the Fed is injecting 1.5 trillion. It's ludicrous. Anyway, I just saw that on my machine. This is a financial crisis, for sure. But this is not only a financial crisis. Because of the oil world, because of this terrible coronavirus, the entire world has seized up. Essentially, there is no commerce, or at least very little commerce, in most of the world today. Excuse me. And with no commerce or very little commerce in most of the world today, we don't have only a financial crisis. Financial crises you can ultimately deal with monetary behavior and some fiscal assistance. But we now have a business and consumer crisis beyond anything that we have seen since 1930. So that today's situation is much, much more in line with the 1929 crash, followed by the 10 years of the 1930s, with severe depression. And the next step down will be the national product of the U.S., but the world, declining by very serious amounts. with people out of work, of course, because there's no movement anymore, and with the consumer unable to rebuild his consumption as he doesn't have the income to do it with, and a government that is absolutely deadlocked as to how to deal with fiscal assistance to the general public. So you have a lock, as you did with Herbert Hoover in 1929. You have a lock on the real economy, forgetting the financial economy. You have a lock on Main Street that is more a disaster than even what you're seeing in the financial community today. So I think there is, at this point, no escape from a very serious 3-year recession minimum. And I only say 3 years because in these days, everything has accelerated from the days of the 1930s. Otherwise, I would think it would be longer. But I see nothing but pain. I see, regardless of what you do on the monetary front, you cannot save this country by injecting liquidity into the financial system, because, as Lord Maynard Keynes and others have said along the way, you can lead a horse to water, but you can't make him drink. And you cannot make companies and people and so on invest money just because it's there. They invest money and they buy things because they have a normal working and industrial life, which has gone awry and which will not come back quickly.
You know, I mean, that's you paint a very dark picture, and you know, I don't think you're not one of these doom and gloom guys. You're not a perma bear. I don't think.
I'm losing you now. Are you speaking?
Yeah, can you hear me?
Okay. Yeah, that's okay. That's
Okay.
good.
Yes, I was
Okay.
saying that you paint a very dark picture, but you're not you're not one of these like doom and gloom guys, these perma bear type people. I mean, I think a relatively optimistic guy in general.
Now I'm losing your voice again, but anyway, I can figure out what you said. Can you hear me?
Yes.
Okay. I am an optimistic person, but I think that you have a government in place that has leaned towards making the rich richer and not with any concern towards the average man or the poorer people in the society. And you cannot have a society recover from the top 20% having a lot of money. The society can only recover with fiscal spending that gets down to the people who spend their money. The rich spend 10% of what they earn. The poor spend, or the middle class spends 110% of what it earns. You cannot continue the politics of today and have anything less than a depression. And I do not see the two parties meeting to being able to sprinkle fiscal funds throughout the economy to get it moving again. What we see today is ludicrous. We see billions of dollars, hundreds of billions of dollars being thrown back into the financial system. I'm sure it's very exciting for a few people to see the stock market go back up. And it might, not that I think that these billions of dollars are going to help very much. But the fact of the matter is the stock market going up has more to do with the Trump administration's issues about getting elected than it has to do with a surviving economy. And we must get to serious fiscal spending, infrastructure building on a level where we employ people at fair wages in order to bring the economy back to a functioning level. Otherwise, you sink. And we are sinking. That's not optimistic or pessimistic. Right. It's realistic.
What about now in terms of like infrastructure? I mean, I know like Trump made a big deal of investing in infrastructure, and I think there is that's one of his goals is to do more infrastructure. What I mean, where do you see the markets like or the economy? Let's call it 6 months from now. I know you're saying 3 years, but we're talking about, let's call it September, October 2020. Where do you see
Okay,
things?
first let me step back a moment and talk to the infrastructure word. I think that the only infrastructure that Donald Trump has sponsored aggressively
The
is
wall.
the wall in Mexico or in the United States against Mexico. I can think of nothing else that's gotten built, and I think he'd rather like to tear down New York. Okay. Where do I see it in October of this year? I would guess the Dow will bounce off of 14,000 because that looks to me as an interim step in the downtrend. I know we're getting a big bounce today, and everybody's going to be talking a bull market again, but it's all nonsense. I would think the Dow will be in the 14, 15,000 area by October, maybe lower. I would think that uh, the growth rate will be about a negative 8% rather than a positive 3%. Um, I would think that the unemployment rates will be unsurpassed uh, going back to the 30s. Uh, that's what I think is happening under the, sorry, I'm a little hoarse, under
Okay.
the administration policies today.
You're saying by October you're talking about an unemployment rate 1930s type numbers?
Yes,
That's like what, 20? You're talking about over 10%, 20%,
close to the 20s.
20% unemployment. It could happen because I mean this. If you right now, I mean basically the, last night I heard that they're gonna shut off, all European flights, European flights into the U.S. I mean that's it.
Well,
Trade
you
is
know,
finished.
in, in this present administration, everybody everybody in the world, other than maybe the English and ourselves and the Irish, are really dirty people. They shouldn't be allowed in this country.
But now even the Europeans now. Wow, that's right.
Well,
Right.
no,
I thought the English are right. The UK still has access. Um, wow. Okay. So 20% unemployment. Yeah. I mean, definitely. I mean, if you have business shutting down, like people can't, you know, earn a living. I mean, stores in Italy are shut. I mean, it's pretty crazy. Um, Now that kind of comes to the next thing is okay. So we got the election coming up, and do you remember, Bush, the first Bush, he had like I think a 90% approval rating after the Gulf War, and then the economy headed south, and he was kicked out of office. You had something similar in '08. Do you see? I mean, and back in just a few weeks ago, Trump looked like be a landslide because the Democratic field was not too impressive. Uh, Things, I don't know, things might be looking different. Where do you see since we're speculating here, where do you see the election turning out 2020?
do you know the story of Cyrus and God and the Bible?
Vaguely. Refresh me.
As I recall, Cyrus became a favorite of God because he enabled the Israelites,
Oh, to
to leave
return.
to leave Babylonia and go to their promised land of the
Right, and
time,
rebuild the temple.
Israel.
Yeah.
Okay, but then when Cyrus misbehaved in some way that God didn't like, both the Israelites and God condemned him. Now we've had the evangelists in love with uh, Trump from the beginning. But now God has struck the country down for his bad behavior with the coronavirus. And you're going to be hearing from the hinterlands the horrors of Donald Trump as their leader in the very near future. This is not going away. They will blame him for this disease because of the way he behaved in the beginnings of the disease and continues to.
Okay. Okay. So you're saying, so who's going to be president 2021?
I mean, let's assume that Joe Biden can carry it through from a
Ooh,
health and energy
right.
point of view. I think he'll be president. I think there will be, I hope there will be, but I think there will be a woman of color as vice president. And I hope that he will have a supporting Senate and House.
Do you? I mean, your honest opinion. Do you think Biden can actually win? I mean, because he doesn't seem to be like in very good shape right now.
I think one of those possums that the Chinese cut open and eat raw and get sick from could win against Trump now.
Okay. But wait, now I actually, now you, I think
I'm
were.
sure you're going to cut. I'm sure you're going to cut some of this out.
No.
It's
We're gonna
okay.
post it. We're gonna post it raw. Now you and I, we probably have very different political opinions, but I love you anyway. So it's okay. But
I'm
also
not looking
I
for
grew up
love.
in the Soviet
looking.
Union, so I know the full perspective. So, but now, Asher, you, I think at one point you were a Bernie fan. Are you still? I mean, are you still a believer?
No, the problem with Bernie is it's too much noise about things he won't get done. In the old days, Bernie made a little bit less noise, and it looked like he would bring good people around him. But now Bernie rejects, including me, but Bernie rejects anyone who has any talent if they're from a different social strata than his voters. And so I think Bernie, as president, will have an inferior group of advisors. I think Biden, as president, will have a very good group of advisors who are intelligent, active, relatively liberal in their economic thinking, and will help the country reboot. It won't be quick.
Okay. What now? I think now. What is that? Tulsi, is she still in the race or is she out?
I don't know who's in the race, or she's out, but I don't know who's in the race for vice president anymore. We'll see.
Right. Okay.
I think
Um,
I think I think if Mitt Romney were a little bit of a stronger character and didn't go back and forth all the time, I think he'd make a great vice president under Biden.
oh wow. Okay. I think he could have won in 12, but that debate. Remember that debate? He just didn't. He didn't go in for the kill. Talking about Benghazi and all that. But he could have.
Yeah, he's weak.
It was
That's the
his. Yeah.
problem. I don't think Biden. I'm going to recommend. I'm pretty close with the Biden campaign, as best I can be anyway. I'm going to recommend that Biden not debate Trump. There's no point.
I'd like to see that debate.
I wouldn't, because I'm tired. I'm tired of the lying and the nonsense.
Right.
And how do you debate someone who every statement out of his mouth is simply another lie? You say that's a lie? No, everybody knows it's a lie. What do you say?
Well, that's part of the. It's part of the entertainment thing. I mean, you probably remember Trump from the '80s. This guy, he hasn't really changed that
Listen,
much.
I've known Trump. I've known Trump since the late '70s, and left every room or party that he came into because I always thought he was a jerk.
That could be, yeah. I mean, there was. I remember. Do you remember that magazine? It was in the '80s, and I was a kid, but I remember it was a Spy magazine. Do you remember Spy magazine?
Sure.
And they would always. It was a great. And they would always like rip into what they called him the short-fingered vulgarian. I remember that line, the short-fingered and
But
it was such a funny magazine. But
but I believe he was paying them for the press.
it could be, but I remember they did they did it as a joke. They sent out checks. They wanted to see who was the cheapest like millionaire. I guess at the time they didn't really have billionaires, but they sent checks to 32 cents, 60 cents, 2 cents, and famously Donald Trump cashed a check for like 2 cents from Spy.
So at that time, he understood his worth.
Oh, it's low blow. I'm a Trump fan, but that's we'll agree to disagree.
Well, when you're out of a job and looking in the streets for something to eat and so on, I'll be here.
I'll
So
come
just
to
call
you.
on me.
I'll come to your house. You'll feed me.
Absolutely.
Yeah, you have a beautiful art collection. We'll get into that in a little bit. But it is concerning though that essentially with the economic situation, you could have like a 2008 type of revolutionary type of event where things flip the other side. So it's anything can happen.
No, but you already have a 2008 event.
Yeah, yeah,
That's there. That's here now.
yeah.
The next event is the collapse of the entire economy, not simply the financial side.
Now, let me ask you this. Now, you've been around for different markets. It seems like every decade there's almost a new theme. We had like in the 90s there was the start of that was the what they called the vacation from history. After the Berlin Wall fell. Then you had the dot-com bubble, 2000, the 90s. What do you think is going to be the theme for the 2020s?
The theme for the 2020s is going to be a new democracy, rejuvenated from pre-Trump, and an attempt to regrow the economy for the good of all the people, not just the top.
Okay, okay. So, actually, let's talk
You
about.
see, I am optimistic.
I know you actually are an optimist. So let's talk about happier things now. Let's talk about the art business. You have a couple of different lines of business. Like what are you doing right now?
I do two things right now that really make a difference in my art business. One, I do art finance. I do both lending and purchase and lease back of works of art from people who want to finance their collections or inventories, etc. And that's a business that's growing pretty rapidly, especially now because times like this are times that people turn to financing to keep going in their business world and collecting world, etc. And then I am chairman of a company called Art Bank. And Art Bank uses artificial intelligence, machine learning, and regression analysis to be able to give you instant values of artwork. So you can put in a picture of an artwork or take a picture of an artwork on your iPhone. You press a button, or a couple of buttons actually, and within less than a minute, you have the actual today's value of that artwork along with comparables and pictures of the comparables and the ability to go back into the auction records by touching the comparable on your iPhone screen and look at in the comparable and look at the history of that artwork. And you can go further and you can look at all the artworks that have auctioned of that artist by pressing another button and compare it yourself to the one that you just got a price on.
Okay, so this sounds like a real game changer. I want to go into some details with you on that, but
this is a game changer.
It really is. No, but this is. First let me ask you just a quick overview. The lending business, like right now. So typically, like, what kind of works are you lending money on, and like how does the transaction work? Do you physically have to take possession of it? Like, what are the rates? What's the LTV?
I'm losing you, but I think I know what you said.
Okay.
Excuse me. Well, okay, let's start. So we do lending or leasing of virtually every period of art from antiquity to the present. That doesn't mean that we think that it's all the same, and it doesn't mean that the LTVs are all the same for all of it, and it doesn't mean that we don't do maybe 4 or 5 times the research on the possibilities of antiquities and old masters than we have to do on very current works.
Sure.
But we do a very broad range. I think we're the only people in the business who do that broader range. And typically what happens is a collection will come in, or a group of pictures, or sometimes one, though we prefer not, and we'll do a quick evaluation through using Art Bank, where it's possible. Art Bank only deals with 400 artists right now, but it's moving up to 1,000. And then we'll come to a place where we can issue. I mean, there's more to it than this, but where we can issue a trial term sheet. And should the client be interested in the terms of either the lease or the loan, we will then go forward and do deep research We have a group of people here, and we'll go into deep research as to many, many issues: authenticity, quality, real valuing, condition, etc. Then we will issue a final term sheet, which everyone will sign on to, and we'll proceed with loan documents. Typically, we keep the works, but on the leasing side, assuming we're leasing to a major hotel chain or a building or whatever, we can and do from time to time, more than from time to time, allow the artworks to remain in the possession of the person leasing them from us.
Okay. And what like in the current environment, like what are the like what are the interest rates?
I think you'll see interest rates at the banks at about 6%, 5% for art loans.
Okay.
But the banks only lend to their private banking clients,
Right.
and they don't really do art loans. They really do collateralized loans against the full worth of the people. But in the area that we're in, the rates generally run from 9% to 18%. We're at the 9% level, sometimes the 8% level.
Okay. It's asset based. Okay. So let me ask you. Okay. So let's talk about art bank. I find that fascinating. So from what you're saying, from what I understand, now you saying you're working with you're starting off with a pool of 400 names that you can do
Well, we're not
valuations
starting
on.
off. It took 3 years to get to those 400 names. And those are the names that are the most actively
Yeah.
traded at auction. We're now building that up to the 1,000 most actively traded at auction.
Okay. Yeah, I was going to ask you that, like, because when I first came across this, I thought, why is it? Because I think there's about 10,000 artists which have like decent auction records, which have some auction records, let's say above 10 grand. But you have the 400. You're starting off with the 400 that are like the most actively traded, that are probably 80% of the auction market.
Probably. I'm 70 to 80, I think, is a good number.
Okay. And what categories is this, like contemporary, impressionist, old? Can you do old masters?
We can do old masters. We do some, but we essentially are mostly mostly in post-war, but
Okay.
certainly going back through modern, through the turn of the century.
Okay. So I would think, and probably the post-war and contemporary is right now maybe half the auction or more, right?
Yes.
That's half the auction. Okay.
Yes.
So a guy is standing in front of so let's say a guy standing in front of his I don't know Murakami painting. He snaps a picture, and with your AI. You can do. I mean, I guess what it runs through comps, and it can come up. It takes into account size.
It takes into account size.
Period.
Okay, let's put it simply. It looks at 2,000 data points.
Okay.
It then applies 2,000 meaning color, size, blah 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 blah, pixels, etc.
Right.
It then applies, and it compares those to other pictures. It then applies regression analysis as to the growth or shrinking of the artist's value over the past 10 years, okay? Actually over more than 10 years in many cases. It then takes that regression, this is all done in less than a minute. It then takes that regression work back over the comparables and brings the auction prices of the comparables to the present, okay? It then determines the value of the picture that you took a photo of and put into the system. Now it really does it in much less than a minute, but the process for us and for the machines and the iPhones takes a minute. It does it in an instant.
Okay.
It does its work in an instant.
Okay. So
now, for example, just to go further, just one more thing. Yeah. You can look at about 40 data points a day in a picture. And when you're finished, you'll forget 10, and you'll come up with a number. This can look at 2,000 in an instant, and it doesn't forget anything.
Okay. So the 2000, like I'm thinking that when you say data points, we're talking about beyond, the quality, the
Oh,
period.
yeah, because you're looking at every pixel to determine those things.
You're saying
And to,
you're saying your AI can essentially has the eye to determine the quality. I mean, your AI can give a
absolutely,
rating.
absolutely, because it will compare it to the other pictures. It doesn't necessarily determine
Oh,
the
that's right.
quality.
Right.
What it determines is what is the quality of this piece compared to the other ones that have traded at auction over the past years. That it can do.
Okay. So, but it needs, but essentially, it needs to have previous comps to do that.
Absolutely.
Okay. Okay. So let's say like the most who like right now who are the like the sort of the most actively traded big value art. Let's we talking about what Picasso, Warhol. Who else is in that group of?
Well, certainly Warhol is a very active traded artist, maybe the most in the world. And Andy's market has been down for the past 3 years, so it's a very interesting one to track. And Andy's market is a very easy one for comparables because there are,
Thousands.
even though there aren't multiples, there are multiples of everything. So uh, we can be very spot on. I mean, really spot on with Andy. To
Okay.
give you some numbers, we're we're right in 80% of the things we look at. We're wrong in 20% because there are no real comparables. And so it tells you there are no real comparables. But we're right in 80% of what we do. And we're within 10% of normally the next traded value.
Okay, that's pretty good. So in other words,
Yeah,
like if
very.
you have your system obviously can look at a I don't know a red Maryland versus a gold and magenta Maryland of different size and of whatever, and you'll have a number that's pretty accurate.
You got it, man.
Okay, so
Absolutely.
so the problem is you're essentially you're gonna destroy a lot of the art business with this.
No, no. In fact,
The
at first,
arbitrage the information advantage is gone.
at first, everybody thinks this.
Right.
But you go you go into an art fair, and everybody's very nervous. And you take a picture, and you come up with a number, and you talk to the dealer, and he breathes easily because he either says to you, "That's what I paid, and I've only marked it up 20%, which is fair," or "That's what I'm selling it for." 90% of the time, that's what happens. So the dealers are getting less and less concerned. Okay, so now we look at, I mean, that doesn't include Gagosian, but because his markups are a bit different. So now we go to the appraiser. The appraiser says, I'm going to lose my job. But no, you're not going to lose your job. Your job's going to get easier because you can start right out with the closest comparables at auction that exist. And then you can go on to do the rest of your job. You have an index figure, and then you can go on to say this is better than other ones, not better than other ones. It traded in the private
Okay.
market at such and such. So it's an aid. It takes a day out of each picture when an appraiser is doing his work. Well, it goes on and on. Take an advisor. An advisor normally doesn't give advice. They sell pictures to their clients, and they go out into the marketplace, and the client expects them to know the values. They say, yeah, this is a great picture. I think you should buy it. But they expect them to know the values. The client asks for the values, and they can come up with it in a minute, and they probably did it before. So it's very useful. It's a game changer, but it's not a destructor.
Okay. And how does the service work? Like, what's the business model? What do you charge for it?
We charge nothing for a number of things. We charge nothing if you want to put your collection in the cloud. It's a very, very interesting place to keep it, probably the best of all of them. We charge nothing for the equivalent of ArtNet, except that you can come in and get the equivalent of ArtNet. We're not fully developed in this yet, but it'll be developed totally within the next couple of months. But you can get the equivalent of ArtNet with color photos that are high res as opposed to the ArtNet photos.
Okay.
And if you click on any of them, you go back to the auction page, and you can read completely what the auction page says, which you can't get on ArtNet. Now, we also allow you, if you're interested in artists, we will give you from the major auction houses in the world, of which there are more than 20. We will give you, every time that artist is coming up at auction, we will give you a notice. And if you're interested, we will give you a picture of the page free. The only thing you pay for is when you want to value any of this. So you get a picture of the artist, you get a picture of the picture, and it's at an auction house, and you want to say, what's this really worth? When you press that button, you pay.
Okay. Okay.
Or when you're in the art fair and you press that button, you pay.
Okay. So yes, it's very interesting. So essentially, you're going to have a price database. Is that only on these 400, or is that other artists as well?
No. The database will be eventually. It's not quite yet on 10,000 artists.
Oh, the whole range, basically.
Yeah.
Okay.
Yeah. And it's very much on the way. Okay.
No, this sounds very interesting. So it gives you all of the catalog page information. Okay, wow. So this could be a really a game. This could be the equivalent of the Bloomberg terminal, circa.
Yeah, we have to talk to them and see if they want to put it on their terminal.
Yeah, no, it's interesting. So actually, let's kind of wrap up. I asked you about your economic outlook. Let's talk about your market outlook for some some sectors of the market. Where do you see what do you see happening in the, let's call it the overall market, meaning post-war, contemporary, impressionist, old masters? What's happening? Where do you see things happening right now?
Okay, so typically when you go into this kind of economic and stock market environment, the art market goes very quiet, because nobody's willing to transact at what might be the new prices. We're a little different than that, because we also have inventory and we're in the art business to some degree because of the financial side. We're a little different from that. When we see this kind of thing happening, we reduce our prices by 20 to 30%, and we're there to sell if people want to buy it, what I think to be the right price now. But most people in the business, because it's a dreamy business, it's a beautiful business. And so most people in the business say, this is a great picture, and I don't want to sell it for less. And then a year or so from now, when they really realize that the prices are down 35%, they say, but I need some money. and that's when you kind of hit your bottoms. You hit your bottoms. It starts to go bad price-wise 6 months out, 3 months out, and you hit your bottoms a year and a half out. And then it either goes quietly or it rebounds according to the economy.
So essentially, right now there's no price discovery.
Very little.
Okay, but you think prices will sort of go down, maybe collapse for the next 12 months?
Well, I think the word collapse is a bad one. I think they're going to creep down in the next 12 months, probably 30%, I think makes sense. But it's not, that's a very big, you can't say that's going to happen for Picasso and everybody else. It's going to be different for every artist.
Right. So yes. Let's talk about it. Like let's say like how would you say which artists do you think are going to get impacted the most? Do you think I was thinking about this last night. I was thinking I was going to ask you. I have two names which I think there's a theme which is going to get really knocked down, which is these sort of irony humor artists are not going to make it through the new kind of environment, maybe like the Christopher Wools, the Banksys. What do you think of this?
I think I put it in a different way. Okay. I would think that the artists who have been promoted aggressively, and sometimes too aggressively, will probably be the ones who are most vulnerable and will take the longest to get back. And if we go back in time to 1989, which was the height of that market, you will see a series of artists who are perfectly good artists, or at least most of them, who were very promoted during the period, including artists who I really think are quite good, such as David Salle and Richard Prince at the time, and Schnabel, who might be a little less good, but was still, kind of very deeply accepted, and Clemente, and a whole bunch of people at that moment. And those were the highly promoted contemporary artists of their day, and there are many more. And those artists dropped in the 90s because, as you recall, the first 5 years of the 90s was a pretty bad art market. Those art, well, maybe you don't recall because you're too young, um, but those artists declined and declined the 30% more or less that I'm talking about, but they didn't trade. Nobody was really interested. And it took really into the 2000s, well into the 2000s, before they began. I'm getting a call here. Well into the 2000s, before they really started to climb back up in price, those that were still accepted and good. So I think that's the same thing you'll have happen here. You've seen the Cause and the Grochans and maybe good artists, not good artists. I don't want to make a value judgment.
Sure.
I do make them, but not here.
Right.
And I think you'll see those people get hit the hardest and go the most dead for the longest period of time.
Okay. You're saying the ones that have been hyped the most, so to speak.
Sure.
Okay. So okay, and what? But where do you see so in other words, 30% is actually not even that bad.
No, but I think that's realistic for the good artists.
Yeah.
I mean, there'll be other artists who just fade from the scene totally.
Right. It's interesting what happens sometimes. Like artists, I read an article. Where did I read this? That so these artists, some of them just get disappeared as they it's sort of like those Stalinist photos where they airbrush a guy out of a picture.
Well, I mean, you certainly have that in the color field artists. You take people like Helen Frankenthaler or Jules Zalitsky or Ken Noland. All of those people really disappeared for almost 20 years, and now they're leading the market. And there's a serious base and people thinking about them, and those artists probably will not go down,
right?
Because they've reappeared as artists who were very important, who we forgot about, but now we know how important they are, and their prices are not too elevated yet, and they haven't been hyped.
Right. I was saying like more in terms of now those were like pretty serious artists that always had like an auction track record. They had shows, but like sort of like more, let's call it artists, like younger artists. They might have a few shows, they might have a few auction records, and then all of a sudden they disappear.
I didn't hear the rest of your conversation. I'm sorry.
Oh, okay.
Disappear was the last word.
Oh, okay. No, I was saying like there are some like more contemporary artists that are they've been hot the last couple of years. What is it like that? What do they call that school? The bad painting school? Like these guys that got hyped up in the last like 5 years. It was a group of artists like in their 20s, early 30s. And what happens with some of these guys is that they might have a couple of auction records, and all of a sudden there's no more transactions after that for 20 years.
Yeah, it happens.
Yeah,
it's sad that it happens to the young artists, really, but it happens.
Yeah. So where do you see opportunities in the art market in the next 6 to 12 months?
Whoop! My battery is about to die.
Okay. Well, on that note, Asher, we'll continue another time.
Okay. Don't forget to send me a copy.
I will. Asher, thank you very much.
And thanks a lot. Thanks to you, Jack. I enjoyed it.
Thank you.